Well, couple minutes to the bell. There is one possible gapper on the list, although right now it's below 50%, which means it's not valid. But if it spikes up here in the next couple minutes, it could just barely be valid. And let's see how many shares we need on this bad boy. We need about 800. I haven't checked on these yet. Not terrible. A little more expensive than I'd like, but we'll see. We might not even need them anyway. So I'm set up for the TQs trade since we're out of that. Qs are easy to borrow. That's good. And as always, we'll keep an eye on the Qs and the SPY today to see if we get a close above the 20-day moving average. That would give us another entry. That's it. So we sit and wait for the open. And keep the scanner up here for a couple minutes, but you can see AZI is the only thing that's been popping on the scanner all morning. So it's been on and off because it's been flirting with that 50% area. And it's Friday, so if we don't get any plays other than the TQs, that's okay. I remember when Ross Cameron, I don't know if he still trades live or if he's still as popular as he used to be, but he used to always get made fun of for saying, "Did you eat well? Did you sleep well?" There was something else too. There was like a third thing, and everybody would always make fun of him. And I thought, like, no, those are actually really important things. Like, if you didn't sleep well, like you're not as mentally sharp as you could be. You're not going to trade as well as you could, and eating well is just important in general. So anyway, I wonder if Ross is still out there doing his thing. I haven't seen him in a while. I'm sure he is. I'm sure Warrior Trading is still. I mean, he had a huge business, or like multiple people working for him. So I'm guessing he didn't just close up shop. But so anyway, did you eat well? Did you sleep well? What was the third thing? I can't think of what the third thing was. I'm pretty sure there was like, did you eat well? Did you sleep well? Did you do something else? I can't remember what it was. I would like to see the market keep rallying. Uh, so that would mean going long on the TQs this morning and hopefully not getting stopped out, and then getting a close above the 20 moving average on the SPY and the Qs would be great going into the weekend. I'd take that. So yeah, so in case you weren't watching, AZI did not open at 50% or above, so it's invalid for my gap play. Which reminds me. to stop this and this file. So sometimes the interrupting of this takes so long. It's easier to just start a new console. Then quit this one. So we'll start the spike scanner. Interesting though that AZI is now making a run for it, so to speak. So it's halted up. It's crazy. Ridiculous action on that thing. I remember I was in a chat room with one of the more popular traders. This is back during like COVID, and he used to like I say who, but he used to listen to Warrior Trading, and he would take the opposite of his trades. And they just called him Chat Guy because they didn't want it to be like known who they were listening to. They couldn't. Basically, he was worried about like I think getting like sued or some sort of yeah legal action. So he would just call him Chat Guy. God, that was fun. It was ridiculous. All right, so we're just hanging out, waiting for the TQs here. That'll be less than a minute. Shouldn't have any hiccups there. And then we've got the spike scanner running to see if we get any spikes. Nothing yet. Although, depending what AZI does, we might get in that on a spike. So really, we could move this to a 1 minute chart. All right, looks like we're going long TQs today. So press that button when we get there. $52.77 is our entry. So 52.51 is the stop. Seems pretty tight. Looks pretty tight. All right, let's see what we get out of it. Let's do this. $52, Schwendy Schwen. 52.51. All right. Set an alert here. 53.03. That's our trigger for break even. And now we wait. We're stopped out on the TQ's position. Didn't take long. It does look like AZI is probably going to give us a spike entry, I would imagine here. Excuse me. Yeah, so 286 was 30% above the open. So this is a play that I'm honestly still kind of in the testing phase. So I'll probably would just take like a small size here. The trigger. So be para 50. So there it is. Hit the scan. So basically what we're looking for now is a close below the previous candle. So and also we have to, oh man, the fucking locates are super expensive. Yeah, I'm not gonna touch this. I don't think I'm gonna play this. Actually, locate four. Oh, they're out. It sucks. They had locates for 0.05 there for a second. Shit. All right. Yeah. There it is. That's so this is the close below, I think, right? What's the close here? Yeah, technically that's a close below. So yeah, maybe able to get in there. We'll keep an eye on locates. Might jump in on this, but I'm not paying fucking 0.43, that's for sure. Ridiculous. Ridiculous, man. Ridiculous. This is honestly the most annoying part about shorting small caps is the whole locate fee business. Like, and I understand it. I mean, I'm not saying it's you know that it should be different, but it's just an annoying part of it because unless 0.25 again. God damn, they're expensive. So my general rule of thumb, by the way, is to pay no more than 5% of the price in the locate fee, right? So at at $3.05, 5% is like 15 cents, 0.1525 technically. Uh, and even that, like, well, do I really want to pay 15 cents per share? I will say too, unless I'm using it incorrectly or I just don't understand how to use it better, DAS's DAS Trader's locate system is just. I mean, there used to only be like three locate sources, which I understand that was limiting as far as like what the availability was then. So they added more sources, but like it's just not organized in a way that makes sense. Like some of them only pop up in this box. Some of them pop up down here as well. Some of them when you let's see if we can yeah, so like here, if it's locate one, then you have to like locate the order here, press this button, right? Yeah, that sucks when you get stopped out and the TQs are running away without you. Um, it just hit my break even target, but I'm out of it, so it doesn't really do us any good, does it? Did I see like point oh something? No. You see, like, and you gotta look through this shit. Like, just I don't know, make it so that you just show me what the best price is. Like, this is the best price. Here you go. Like, like why do I have to just sit here and look through all the things? And like, if there's no shares available, just don't show up. Like, I don't want to have to sort through this and see which ones have shares, which ones don't. It's just not efficient for very quickly determining whether you can get locates or not. I don't understand. They really could do a better job with that. But look, it might not be that people who need locates are their target audience, so maybe they don't give a shit. Or again, maybe I'm not using this thing correctly, but yeah, there's just so many quirks about this. Like this one, then you don't have to go down here. This is locate four is one of the ones that shows up down here, and then you have to click here and accept the offer, and then but locate one, you have to type another thing in this box and then click here. It's just like make it uniform and make it easier to just deal with. It's such a shit show. I don't know. I'm just pissing and moaning now, but it is annoying. So I'll still keep an eye on this. Basically, if it's $3 or above, I'll think about getting in on this and setting my stop, which I think my stop would be like 450. It's a 50% stop on these plays, I believe. Again, I'm just still kind of testing this play, so I'd be going in with some pretty small size. And if the locates stay this expensive, I'm going in with zero size. And of course, you're going to have some people that say, well, even if the locates are expensive, if you miss out on a big winner, the win would have paid for the locates, which is true, but you have to think of everything in the aggregate, right, over time and in average, because You could also pay a lot up in the locates and then get your dick handed to you. And that's going to happen sometimes too. So over time, if you pay too much for locates, it cuts into your edge, and it just ends up not being worth it. But it also makes back testing hard because with back tests, you don't really know locate fees, right? So you have to kind of just figure out, all right, well, what's my average locates going forward, and try to apply that to back tests. But it's hard to know. So you want to be conservative in the sense that you want to, when you're back testing, you want to put in higher locate fees than on average than you think that you'll end up experiencing in the real world. Um, because they can definitely cut into your edge. I mean, if you're, paying 5 cents, 15 cents a share like we would be today, it's the most I'm willing to pay. You have to do that pretty often. That's definitely going to cut into your edge. There are times too, and I maybe could have done this morning, but let's say your entry was supposed to be $3, but then you've got an insane locate price. What you could do in a situation like this where the price was higher, you could get in higher if it's available. Obviously, you can't count on doing this, but if it's available, you can get in higher to try to compensate for that price, right? Like, so let's say I'm willing to pay 15 cents a share, and the cheapest I could get is 25 cents a share. If I can get in 10 cents above my my normal, what my entry would be, so I'd get in at 3.10 versus $3, and that compensates for that 10 cents per share, right? You would keep your stop based on getting in at $3, if that makes sense. So I guess I could look at doing that if I really want to, but the price would have to get back up to 3.10 and give me the chance to get in up there. But I just saw 0.18. Oh shit, this one's SSR. Okay. All right, so I'm in at 308 instead of $3. Remember, this one's a wide stop as well. All my small cap plays are wide stops. I was thinking about that this morning actually. Like, why does the wide stop thing seem to work so much? It's a lot of people who trade small caps will get in and get out very quickly, keep their stops really tight if they're going to sit all day and watch this thing. Like, let's say this thing doesn't just roll over here and it keeps climbing for the rest of the day, right? But at some point late in the afternoon, it finally rolls over and it starts to fade. So a lot of the guys, especially like the prop firm guys who will just sit there all day because it's their job to sit there all day, they'll get in 10 times before they actually end up with a position that works for them, right? So they're able to keep their stops really tight because they're going to get back in multiple times. Whereas like I don't want to sit here all day, so I'm willing to just get in early and play the odds of Yep, like really wide stops. They get hit sometimes, but over time, if you get in early, even if it goes against you for a little while, it ends up being positive in the long term. Um, on average over multiple iterations. So anyway, this is a really small position size. Again, guys, I'm just kind of like testing this to see if I like this strategy. Uh, it's not my favorite thing in the world, but if it's going to make me money, I'll trade it. So just kind of putting a feeler out there. I don't even have a in my tracking sheet. I don't even have a tab for it yet. So this is the TQs play uh, that I've been trading since April, March, April. Um, and this is like the box where I put in the entry price here, and then it tells me what my stop is, and once I adjust the ATR, it tells me what my size is, all that stuff. And then this is for gap. This is for the gap shorts, which by the way we didn't have any today. Uh, so yeah, same idea. This is just where I record them, and this is where I put in all the info that tells me there's three different boxes here. It might not look obvious to someone who's not familiar with the spreadsheet, but these are three different boxes for uh, you put in the entry price, and then it tells you what your actually put in the open price. Sorry, and it tells you what your entry would be, what your stop would be, what your size should be, blah blah blah, all that. And it also calculates the maximum I would pay for short locates. And then there's a tab for just the SPY and Q, which I just started trading this. Um, this is the swing trade that's based on the 20 simple moving average. And then these other ones are just, this is the history of the gap shorts because from when I was back testing. And then this one was my TQs. Uh, I used to modify this before I put it on YouTube, but I don't modify it anymore. So, anywho, it's yeah, I don't even have a tab for this spike play yet because I'm not committed to it just yet. The back test is good. It's one of those things though that I'm afraid the back test is not realistic uh, proxy for what it's going to be like to actually trade it. As you can see this morning, like it's just the locates made it a little weird to get in. I kind of had to wait for a spike to compensate for the expensive locates, and yeah, I just don't know that I love the setup in general. The tough part about having the gap play and the spike play is that they're both high win rate but wide stop setups, and so I don't love that. You know, it's it's hard to it's hard to have that be a large chunk of your entire trading system. Just because those wide stops cause huge losses, right? And so every once in a while you can get slapped with a couple of those in a row or even in the same day, and that's pretty hard to take. So I don't have a profit target. I mean, technically the profit target on this is 100%, which almost never gets hit. So when I set my stop, I didn't even do a range order. I just set my just realized what I said about 100% stop. Um, yeah, I set that in the back test just to say like, okay, we're basically gonna let these run until the close, because the way my test was set up, it was, there was a target or the close, so either stop, target, or close, whatever gets hit first, or whatever happens first. And so I just set the target to 100%, which would be zero, by the way. So it literally never gets hit. Let's look at so, point oh 0.07 is the hmm, hmm. Just trying to see like, okay, what would my actual share size be? Yeah, it'd been like 500, 600 shares. So for this setup, I think it's quarter Kelly I ended up going with was like 7% of your bankroll risked on each trade. And stop that scan. That's going to be it. So we got stop down on the Qs and or the TQs, and then we're going to stay in this AZI until the close, and then we'll also look at the close for entries on the Spire Q, depending what happens in the broader market. So that's it, boys and girls. Good luck.